leasing. Okay, so page 29. What is leasing? It's really a long-term rental. Okay, long-term rental. And for some reason, leasing throws students off. Like we do okay with it when we buy new, used, it's okay. Amortization tables, like, right? And then long-term, and then leasing is throwing us off. Why would somebody lease? Okay, the first reason why somebody would want to lease is because the payments are lower. If you look at this 2021 Santa Fe, if you were to go and finance the whole thing, you'd be paying, I'm just guessing, $600-700 a month, roughly. It's a brand new car. If you go leasing, you're probably going to pay $390-400 a month. It's going to be less. And the reason is because you're only paying for some of it, not the whole thing. What happens to a car as soon as you drive it off the lot, a brand new car? What happens to its value? Depreciate. So if you lease a car, you are getting a brand new car. You drive it off the lot, it depreciates. So the dealer knows that. So they kind of forecast after 2 years, when you're, let's say you take it for 2 years, when you bring it back, they know that the car will have lost. On top of that, you put miles on it. That's also not good, right? So they want to make sure they get that back and then some, because let's face it, everybody needs to make money, and so the dealership makes money on that as well. So a lot of times when you buy a used car, it's actually a lease return, right? Like you're thinking somebody else owned it and they sold it to them. Maybe it was a trade-in, maybe, but quite often it's a lease return, and they're selling it, right? So sometimes it's appealing to business owners because you can return it and just keep getting new ones. You can write it off from your business expenses and so forth. So we'll talk about that as we go along. Okay, so let's highlight a few things. You are paying, right? You're paying for the depreciation and the use of the vehicle. That's basically why it's cheaper. It's not the whole car, it's just some of it. You have the option to buy it, right? You have the option to buy it at the end of the lease. So some people will lease it and then they're like, you know what, I really like this car. I'm just going to go ahead and buy it at the end. When it's time to return it, you go buy it, right? Which is not always cheap, but hey. And so here are some definitions here. And there's usually, not always, sometimes there's no down payment, right? But if there's a down payment, watch this, it's not taxed, okay? I will highlight the not taxed and taxed. Your lease payment, it's the amount you pay per month. In our case, it's weekly, sometimes it's bi-weekly, but we're going to talk monthly. And watch this, it's taxed 12%. The payment, read carefully. If it says the payment before taxes is this, well, you would have to add 12% to that, for sure. Term of lease is the number of years, right? Years or months, or the maturity date is the same thing. And then there's residual value. I don't want you to be scared of the wording. They basically mean the same thing. But the residual value, right, is usually stated as a percentage. And watch this, it's taxed 12%. So you highlight the 12%. So then there's something called guaranteed residual value. It is similar to the residual value, but if it is stated as a fixed dollar amount normally. So for example, the car you lease might be worth 30 grand new. When the lease is over, it'll be worth 18 grand. So 18,000 is referred to as the guaranteed residual value. You can expect to pay this amount at the end of the lease in order to own it. You are essentially buying the vehicle you rented. Uh, I should say that this is also taxed, right? If this shows up, then it's also taxed 12%. Make sure you add that. Let's highlight that as well. Okay. Then this is big. This is big. This is why I would never lease a car, because I travel, I fish, I go out of the city a lot, I hunt, I do a lot of highway driving. So mileage cost, most lease agreements have a limit, right? There's a limit on the kilometers you can drive. Okay, my highlighter has seen better days. It's running out of juice there. It is usually stated as, that you can drive 10 kilometers per year, for instance. So a 3-year lease allows you for 60,000 is wrong, right? Sorry about that. Let's change that. If it's 10 kilometers per year, a 3-year lease would allow you to drive 30,000 kilometers overall. The lease agreement will state the cost per kilometers, and there it is. Like, it could be 15 cents for every kilometer passed, right? And watch this, it's taxed 12%. So if you're not doing anything, you're just reading along, at the very least, tell yourself, making sure that you know what is taxed, right? And here's the big statement that I'm going to put down, okay? Anything, write this down nice and big print, right? Anything that gets taxed on a lease, comma, right? Comma, anything that gets taxed will be taxed 12%. So you don't have to worry about, is it only 5? Is it only 7? Leasing, do not worry about it. It's 12%. GST, PST. That is huge. If you remember that, if a question ever asks you, find this on a lease after tax. Okay, I know. Mr. Jackson told me if it's a lease, it's always 12%. Make sure you know that, because I do get the 7% creeping up here and there, and unfortunately that's not the case. Okay. So mileage, if there's ever a mileage question after tax, you add 12%. If there's ever a guaranteed residual value question, find it after tax, 12%. If they ever want you to figure out the payment after tax, 12%. What's the only thing that doesn't get taxed? Your down payment. Your down payment does not get taxed. And what's the down payment? You don't get that back. So let's say they were like, yep, you can drive off today, sir or miss, right? As long as you put $2,000 down. And so you'll never get that money back. That's kind of like already a payment towards that lease, right? So you don't get that back. Sometimes there's a security deposit in case you have like 5 dogs and you put them all in the car, and the dogs tear up the leather seats, right? And you bring it back, they'll have a security deposit, right? Most likely you're gonna have to pay on top of that. But anyways, it's kind of like an apartment. Sometimes you have to put a deposit down, like a security deposit. You might get that back, but the down payment you don't. All right, let's go to 30. That's where this is the meat and potatoes of this unit. Like, these are the formulas which they have to somehow find their way onto your study sheet. Okay. Remember, you're the first generation that gets the formulas. I used to not give formulas, right? So you benefit from that, I hope, at least. So this is for leasing, right? Anything to do with leasing, you should have a leasing category. Don't mix it up with all your other formulas. You will mix them up. I can guarantee you that. And some of them, these are basics, right? So this is, can you put down in a little bit, hold on. If you want to find out kilometers past the limit, then obviously you just take the kilometers you actually drove and you subtract the allowance times the years. So if you were allowed 10,000 kilometers per year, then this bracket here should be 30,000. And if you actually drove 40, then you went over by 10 kilometers, 10,000 kilometers, right? So that's that. And then mileage cost, you basically take the kilometers past the limit, you plug them in here. Okay, once you figure this out, you plug it in here, you multiply it by the rate per kilometer and by 1.12 because of the taxes, right? And I will say this, that mileage, right, may not always be mentioned, bless you, in questions. So again, if it doesn't mention it, omit it. Don't worry about it, okay? And then here, this is the perhaps the most important one. The total lease cost or total lease, right? You take your down payment, you would put the total payments in here, right? This part right here, if you want to name it, right? Total payments after tax, okay? So how should I say this so that it sticks? If a question says the lease payment for George is $500 including taxes, would you multiply that by 1.12? Nope, it's already including taxes. So this 1.12 should tell you that it is there just in case taxes need to be added. Okay, so taxes, right? That would be taxes, and that is taxes right there, right? So it's there in case most of the time they don't give you the taxes, right? So you need to add. That's why I put the formula like that. And mileage cost obviously is already done. That's the mileage charge is the same thing as this. If you want to put charge right next to it, some students are like, why did you say cost here and charge there? Same thing, right? So if you do all, I usually do this separately and then just add it to my total here. I will do this, no taxes, okay? No tax. Question, exclamation mark. No tax to down payment. And let's put under this, it's after tax, right? This formula would assume that you're trying to find the price after tax. And you're like, but Mr. Dixon, you just said no taxes. Yeah, because the down payment doesn't get taxed. Kind of like the lien search. It doesn't get taxed. And the last one, total cost including purchase, right? You take your down payment, total payments, and the mileage, plus the residual value. So put this down here. This part right here is your total lease cost. Okay? These three here, so it's basically what just happened above, and so this is the residual value. Can you put times 1.12 on the residual value? Yeah, let's make that. let's put this, you buy it at the end. So that piece right here is if you buy it at the end, you would do this here. Okay. Make sense? Make sure you have these on your study sheet. The pros and cons, I'm going to talk about that tomorrow. Let's do one question. I know your stomach is growling, right? Get me out of here, right? I need to eat something. Or you're falling asleep on me right now. Just go like this, right? Right, wake up because we're gonna do a question. Okay. Okay. Page 33. We're skipping to 33. Got it? Page 33. If you weren't writing down, now is the time to start again. Okay. So minivan sells for an MSRP. That should not surprise you. That's the suggested retail price, right? On 33. And so let's highlight that. And leases for $479 per month plus tax. So I'm reading that, right? I'm trying to put myself in your shoes. Like, is it saying take it and then add taxes, or what's going on here? Yes, that's what it's saying. It's $479 plus any applicable taxes, which we know is 12%, right? Okay, good, because we're in leasing. There's our term, 24 months. There's a down payment that is required. The guaranteed residual value is 62% of the MSRP. So it's 62% of what it's worth at the beginning. So normally the question will tell you what the car is worth, but you're, instead of buying it, you're just going and leasing it. And when you lease it, you only pay for some of it, right? So let's do some math here. Calculate the total amount paid by the end of the lease. And so when you see that total paid by the end of the lease, if you see those words, you should be able to decipher and go back to your formulas. And it's asking for total. I'm just want to make sure I use the same total lease cost. That's the one that you're using here. This question has nothing about mileage. Did you notice that? It doesn't tell you how many miles you're allowed. It doesn't tell you how much to charge, so forget about that part. That'll be done tomorrow. A. I'm going to just call it TL like this. Total lease. I take my down payment. That's what the formula calls for. Plus, in the bracket, it says to take the payment, we need to add taxes. So this will be done like this. So you're already adding taxes to the 479. And you need to figure out how many months are you making this for. It says 24, but sometimes it tells you years. It tells you 3 years, 4 years, whatever. So it's easy, just convert it to months, multiply it by 12, right? So payment, taxes, over 24 months. So this is your down. This is total payments after tax. TL is $1,500 plus. You can do this in one shot. When everything is multiplying, you just this times this times this. And so you get 12,000 $875.52. TL, right? You just add these up. 14,375.52. That, ladies and gentlemen, that's your total lease. That would be the lease, including the down payment and the payments themselves. And I'm just going to go read. It doesn't say, that's my bad. I should have been. So I'm just going to clarify that this is after tax. That is after tax. Do not go ahead and multiply by 1.12 again, because this here took care of that. Okay. B. Let's do B here. Calculate the total residual value of the minivan after tax. So I will do it in steps. Residual value. You take the MSRP, so which is 28,500, and I multiply it by, it's 62%, right? That's what we're told. 62% of the MSRP is our residual value. That's what you're going to have to pay at the end. So you go 62 divided by 100. I'll just quickly crunch that. This is how much you would have to pay before tax. Okay. So you just grab that value of the car and multiply it by whatever it says. If it's 80%, then it would be 0.80. If it's 75%, it's 0.75, right? So just go ahead and, you want to do arrows? I love arrows. Arrow bars, even better. There you go, right about now I could use one. And so if we multiply that out times 1.12, we get our after tax amount. Let me zoom into that part because some of you are far away. There. That's better. Right? Times 1.12. 19,790.40 after tax. So if you were to buy the car at the end, this is how much you're looking for, right? And think about it, leasing is only done by a dealership. So when you buy the car, you buy it from a dealer, right? So it's a used dealer scenario. So it does make sense that we're paying 12% on it. C, last but not least. I'm going to stay zoomed in here, so you go ahead and read with me. It says calculate the total cost of leasing and buying the car out at the end of the lease. Sometimes it's saying buy the car outright. Okay, so here we go. C is basically, what did I call it on my formulas here? Total cost including purchase. Total including purchase. And I'm going to run out of room here. I know it. So I'm going to do this. I'm going to grab my answer in A and add the answer in B to it. Right? So just go A plus B, and then I get some room down here. So 14,375.52. We're almost there. Plus 19,790.40. I have to do that here. So I put this number down here, 34,165.92. That's leasing and buying at the same time, including your down payment. So the down payment, total lease payments, and the purchase would be 34,000. You think it's more than just buying it at the end, at the beginning? Should whoever did this have purchased it? Let's check. If you go up to 28,000, so if you went to the dealership and you paid that much, you would pay 12% on that, right? So you would have paid 31,920 taxes in versus 34,000, right? Leasing and buying it at the end. So there's that. So